Hello my dear future charters. We have discussed about the tips for law as well as the tips for the subject of NPO, the topic of NPO from the subject of accountancy. Now in this particular video, I'm going to talk about the tips for CAFC accounts issue of shares. Now this is a very important question. Remember that it is almost like a compulsory question, may come for 10 marks, may come for 12 marks, may come for 15 marks, and it is going to have multiple different types of questions. And it may also come for objectives. So it is necessary for us to have very clearer understanding of this particular topic, and very important that this topic is important even for CA intermediate. So if you are not in a position to understand this particular topic now, then it is going to be unnecessarily difficult for future. So at least for the time being, we are just going to focus not on the complete understanding of the topic, but we are going to talk about basically the tips for CA foundation examination. So let me go ahead now. Now the first point which you should always remember is obviously read the question carefully, and I have always told you that in case of accountancy, always think about what is the question line. Read from the question line first. So have they asked you journal entries, have they asked you ledger accounts, or have they asked you the balance sheet extracts also? So read that particular thing first, so you are clear in your mind somewhere that this is the total format. Maybe I'll require 1 page, I'll require 2 pages, etc. So basically first part is read the question carefully. Next, now check out if the number of applications and intended number of shares issued, are they matching or not? So if the number of shares issued are, let us say, 1 lakh, and number of applications received are exactly 1 lakh, in that case you are lucky, there is no tension, because the number of shares the company wanted to issue and the number of shares which the people have applied for are exactly same, then there is no difficulty. It is not a pro-rata problem, it is not a lottery wala problem, it's a very simple question and you are going to solve it very quickly. But generally it is not going to happen. If that happens, in that case it's going to be hardly a 4-mark question or 2-mark question. Generally you will find that it is not going to match. In that case, check are there any rejections. So rejection means the applications are rejected, that means their application money must be refunded. Then the application money on rejected application should be refunded immediately. Then check whether the remaining number of applications, so let us say the company wanted to issue 1 lakh shares and the applications were issued for 1,50,000 shares, and the problem is telling me that 10,000 applications are rejected. That means now accepted applications must be 1,40,000, whereas the company still wanted to issue only 1 lakh shares. It is impossible for the company to issue more shares than what I mentioned in the prospectus. So it's very obvious that the company cannot issue more shares than 1 lakh now. That means now 1,40,000 are required to be matched with 1 lakh. This is the point which is covered in, or this is the situation covered in point number 4. Check whether the remaining number of applications are matching with the intended number of shares to be issued. If they match, again you are lucky. If no, that is what I have told you just now, 1,40,000 and 1 lakh. Then check are there any classes of applications and check the ratio of applications to the allotment. So what is the situation? First one, company wanted to issue 1 lakh shares and the company received applications for exactly 1 lakh shares. Very simple situation, you are extremely lucky. Second situation, company wanted to issue 1 lakh shares but applications were issued for 1,20,000 shares and company rejected 20,000 applications. So accepted applications are for 1 lakh and issued shares are exactly 1 lakh. That means it is again a simple situation for us. Only one extra entry is going to be there, that is for rejection and refund. Third situation, company wanted to issue, let us say, 1 lakh shares but applications issued for 1,50,000 shares. 10,000 are rejected, 1,40,000 are remaining. To 1,40,000 you are going to issue 1 lakh. That means you have to question now what is going to be the procedure for issue. Then check out, is the problem telling you some classes like applications for 20,000 shares were fully allotted and applications for 30,000 shares were allotted, 1 share for every 2 shares applied, etc. So are there any classes given? Then check the ratio of applications to allotment. So who are given full allotment, who are given 2:1 ratio, who are given 5:1 ratio, some other ratio may also be there in the problem. Check it out. Next one, if there are no such classes, so applications were for 1,50,000, you wanted to issue 1 lakh shares, only 10,000 are rejected. That means 1,40,000 are going to be accepted, but you cannot allot them 1 lakh shares. So 1,40,000 and there are no classes now, that somebody is given 2:1, somebody is given 5:1, etc. In that case, consider that the ratio is for every 1.4 shares demanded, 1 share is allotted. That's what is going to be the ratio now. Or for every 14 shares demanded, 10 shares are going to be allotted. That is going to be the ratio that is mentioned in the 6 points. So if there are no classes, then number of applications and number of allotment is going to be the ratio for the purpose of allotment. This is to be kept in mind. Next one, now certain accounts. This is a very important tip. I want you to remember this table if possible. Write it down or maybe listen it again and again or repeat it again and again. So first one is an application account. It can be share application account, that is equity share application account, or dash percent preference share application account. This is a small point. In case of equity shares, it is equity share application account. In case of preference shares, it is dash percent preference share application account if the rate of dividend of preference shares is not given. If preference share rate of dividend is given like 10%, 12%, then you can write 10%, 12% preference share application account. If rate of dividend is not given, then write dash percent preference share application account. Then there is allotment account. Again, for equity shares it is equity share allotment. For preference shares it is dash percent preference share allotment. It is calls account. It can be first call, second call. For the last call it will be last and final call. That's what is the basic thing we are going to consider. It will be again equity share call account or dash percent preference share call account. Then there can be allotment in advance or calls in advance. Here you need not use the word equity or preference as the case may be. And next one is allotment in arrears or calls in arrears account. Here also equity or preference prefix need not be attached to the name of the account. These are the different accounts which are important. Plus two more accounts are there, capital account and premium account, that I am going to consider in the next slide. Here remember application account, how it works. When the money is received, then application account is credited. So when application account comes for the first time in your books, it will always come on the credit side. Application account must be credited when it is recorded for the first time in your books of accounts. And then it is debited when it is either transferred to the capital, that is the shares are allotted, or allotment in advance, that is if some extra money is received and it is required to be kept aside for the purpose of allotment, or it is refunded. So application account creation is by crediting it and utilization or closure is by debiting the same. I am repeating again, application always credited first and then debited. Credit is at the time of receipt, debit is either when you are transferring it to capital or when you are transferring it to allotment in advance or you are transferring it for bank, that is refunding on account of rejection. Next, allotment account. This is debited when demanded. Remember, for application money is received first and then it is appropriated, then it is decided what to do with that money. Whereas for allotment, money is demanded first and then it is received afterwards. So allotment account, it is debited when it is demanded and it is credited when received or transferred to allotment in arrears account. So application is exactly opposite of allotment, or allotment is exactly opposite of application. Application gets created out of credit and gets closed out of debit, whereas allotment gets created out of debit and gets closed out of credit. It is credited when received or transferred to allotment in arrears, as the case may be. Next, call account, it behaves exactly like allotment account. It gets created out of debit because you are demanding the money from the existing shareholders that please pay the call now. So calls account debited when demanded and credited when received or transferred to calls in arrears account. Next, allotment in advance account or calls in advance account. This behaves more like application account because the money is received in advance. Before we demanding the money is received. So it is credited when received and it is debited when the amount is used. Allotment in arrears account and calls in arrears account, these are our debtors. So debtors, that means it is debited when the money is not received within the stipulated time period of the call or allotment money, and it is credited when the money is received or when the shares are forfeited. So I am repeating again, application and allotment in advance. These both of the accounts are similar in nature. They get created out of credit and they get closed out of debit. Application account gets closed either on account of transfer to capital or on account of allotment in advance or on account of refund. Allotment in advance account gets credited when it is received and then gets debited when it is actually used. Allotment account and call account, as well as allotment in arrears and calls in arrears account, they all get created out of debit and get closed out of credit. But for allotment and call account, debit is at the time of demanding and credit is when it is received or transferred to allotment in arrears account or calls in arrears account in case of calls. On the other hand, when it comes to allotment in arrears, then or calls in arrears, then it is debited when the money is received. Money is not received within the stipulated period of time, and credited when the money is actually received or when the shares are forfeited. That happens for allotment in arrears and calls in arrears, that it can get closed either out of receipt of money or out of forfeiture of shares. Okay. Then the third point to be kept in mind is share capital account. It is always credited, and once credited it cannot be debited unless the shares are forfeited or the shares are bought back by the company, which you are going to study in the next year, CA intermediate. Shares are redeemed, or the company is undergoing reconstruction, or the company is wound up. These are the only takes or situations when the share capital account can be debited once it is credited afterwards. Okay. So the logic is, for our CA foundation purpose, share capital account once credited cannot be debited unless it is at the time of forfeiture. Next is securities premium account. This account is always credited. Once it is credited, it can be debited only when the shares are forfeited and premium money was demanded but not received. This is a very important point. When shares are forfeited and premium money was demanded but not received. The rest of the points, like for providing for premium on redemption of preference shares, providing for premium on buyback of shares, or creation of CRR for buyback of shares, or issue of fully paid bonus shares, or writing of discount on issue of shares or debentures, or preliminary expenses. These points you need not keep in mind while solving the practical problem of issue of shares. For practical problem of issue of shares, securities firm account is always credited, and once credited, it can be debited only when shares are forfeited and premium money was demanded but not received. So that is important for practical problem. Otherwise, share premium account is never debited. Now, upon forfeiture, how to go for that? Upon forfeiture, always pass the following entry. This is a very important entry. Remember it properly. Share capital account debit by the amount called up. I repeat, share capital account debit by the amount called up. To calls and arrears account by the amount of arrears. To shares forfeited account by the amount paid up. So you can repeat this entry 10 times, it will be easy for you to remember the thing. If the forfeited shares were issued at premium, then if the premium was not demanded, then there is no question of debiting it at the time of forfeiture because it was never demanded. If the premium was demanded and received, then again there is no need to debit it at the time of forfeiture because you demanded it, you received it, so there is no need of cancelling the same. But the premium, if it was demanded but not received, then debit the premium account at the time of forfeiture. Debit the premium account at the time of forfeiture. So securities premium account can be debited at the time of forfeiture only if the premium was demanded but it was not received. If it was not demanded or it was demanded and received, there is no need to cancel the securities premium account by debiting the same. Next, if there is allotment in advance, this is a very important point. This can happen in one or two problems. If there is an allotment in advance and it is insufficient to cover the securities premium, then it is adjusted against share capital only. An entire securities premium account is debited at the time of forfeiture because we can say that we have assumed it was demanded and it was not received. Okay. Next point is in case of reissue of forfeited shares. Reissue of forfeited shares, check the reissue number. So forfeited shares were 500, reissued shares are 500. Then there is no difficulty. Or forfeited shares were 500 and reissued shares are, let us say, only 150. Then you have to be careful. So there are two situations. If forfeited and reissued number is exactly same, then debit the entire share forfeited account to arrive at the figure of capital reserve. And if reissued shares are less than forfeited shares, then debit the shares forfeited account by proportionate amount to arrive at the figure of capital reserve. The formula to be used to decide this amount is going to be amount forfeited into number reissued upon number forfeited. I repeat, amount forfeited, so share forfeited amount from the forfeiture entry, into number reissued, that is the number of shares which you have reissued now, 150, divided by number forfeited, that is 500 shares were forfeited. So you will have to check every problem how the formula is going to be filled up with the relevant amounts. Okay, that's how the amount will be decided for the purpose of capital reserve. And in case of issue of shares for consideration other than cash, you have to always debit the asset or the expenses account first and credit the vendor or liability account. What is the meaning of that? Sometimes the shares may be issued for consideration other than cash. For example, for purchase of land and building or for purchase of plant and machinery, the shares may be issued. Or maybe even for paying the director's remuneration, the shares may be issued. In such a situation, you have to be careful. Always pass the entry for acquisition of asset and creation of liability first. So it may be land account debit to the vendor of land account, or in case of director's remuneration, it can be director's remuneration account debit to remuneration payable account. This is the first entry to be passed, where you are going to record the cost of the asset or the amount of remuneration, amount of expenditure, as the case may be. And thereafter, you are going to consider the second part, that is actually making payment of that particular liability by way of shares issued. That is the liability account debit to share capital account if the shares are issued at par. On the other hand, if the shares are issued not at par, they are issued, let us say, at premium. In that case, the entry will be liability account debit to share capital account to securities premium account. So these are the points which I wanted you to understand or remember just before the examination, so that it will be easy for you to solve the question of issue of shares. Now the point which I want you to again recap quickly is application account, allotment account, call account, allotment in arrears, calls in arrears, and allotment in advance, calls in advance. How these accounts are behaving, please go through that table. If you want, you can write that table once. Also remember what is the specialty of share premium account or securities premium account. Don't forget to consider when the securities premium account can be debited at the time of forfeiture. There is a very special situation when the premium was demanded and it was not received. Then in that case, you can debit the securities premium account at the time of forfeiture. Also, don't forget the special situation which may occur only in 1 or 2 problems. And if the problem comes in examination, you must be ready for that. That there is some amount of allotment in advance, but the amount of allotment in advance is far too less than the amount of securities premium demanded. And the shares are required to be forfeited for lack of payment of allotment money. In that case, the premium was demanded. Some part of advance was available, but the advance available is lower than the amount of premium. In that case, that advance to be adjusted against the capital, not against the premium. So premium account can be fully debited in such situation at the time of forfeiture. Don't forget the special formula of reissue and capital reserve. If the number of shares forfeited and number of shares reissued are exactly same, then there is no difficulty. If the number of shares reissued are lesser than the number of shares which are forfeited, then the amount forfeited into number reissued upon number forfeited. That is a formula to be kept in mind. So with this, I am very sure that you are in a position to solve the question of issue of shares properly in examination. All the best to all of you. In the next video tip, I am going to talk about issue of shares, issue of debentures, and I also talk about the special type of situation that is collateral debentures. So all the best to all of you.